In this video, I'll be going through everything you need to know on how to trade options on Webull. I'll be covering stuff such as how to understand the whole option chain UI, how to customize it, and what are the option strategies that are currently supported by Webull. Then, finally, I will also show you how to trade options using Webull and what are some of the things that you need to take note of. But first, if you have not signed up to Webull yet, you can sign up using my link down below. You fund your account with $300, you will earn an exclusive 3 free shares worth anywhere from 3 USD all the way to 100 USD each. Then another 5 free rewards worth anywhere from 10 USD all the way to 500 USD each. Alright, with that out of the way, let's jump right in. First things first, at the start page, click on the options button and you will come to the options page. Okay, I know this page looks super complicated, but don't worry, it's actually quite easy to understand. Let's go through this together. So if I minimize this, you will see the options that have different dates. This option is expiring on 11 August, which is 2 days from now, all the way to December 2025, 862 days from now. Options that are further from expiry will cost more, but the closer it gets to expiration, the lesser it will cost, until it finally loses all of its extrinsic value. I won't go too deep into what extrinsic value is, but basically, options have intrinsic value and extrinsic value. The more time to expiry the option has, and the more volatile the stock is, the higher an option's extrinsic value. Let's take a look at the options that will expire on 8 September 2023, which has 29 days to expiration. On the left, we have the call options, which is indicated by the tiny call word here. And on the right side, we have the put options as indicated by the tiny put here. Call options give you the right to buy the stock at a certain price, while put options give you the right to sell the stock at a certain price. Then in the middle, we have the strike price. Okay, this is the one thing that gets many people confused, where they think the strike price is the option price. It's two totally different things, yeah. Here's one simple example to understand this. You can think of an option as a deposit money to buy a house, maybe this $1 million house. This deposit costs just $5,000, which means with this $5,000 deposit, you now have the right to buy the house at $1 million. Same thing for options. Let's say I want to buy the stock at $180. So I can buy this option at the option price of $3.80. And with it, I now have the right to buy the stock at the strike price of $180. Get it? If you don't understand it, just replay this a few more times and you will understand it eventually. But let's move on. In the middle, we can see the current price of the stock. In this case, it is $178.19. For call options, anything below the current stock price is in the money, and anything above the current stock price is out of the money. This is very easy to understand because since Apple is trading at $178, it's better to buy the stock at anything below $178, right? As for put options, it's the total opposite. Anything above the current stock price is in the money, and anything below the current stock price is out of the money. One easy way to remember this is by looking at the color of the background. In the money options, have a slightly green color background, while out of the money options, just have a black color background. I want to point out two things here. One, all the option prices that you see here are for one share. But because each option contract represents 100 shares, whenever you trade options, you are trading in a multiple of 100. For example, here it says $6.70. So if you want to trade it, it will cost you $670. Second, all the option prices that you see here are delayed by 15 minutes. If you want live option prices, you would have to pay $2.99 each month. This could be useful if you are a trader. But if you are just planning to trade options that have an expiration of 1 week, 1 month or longer, the live prices will not matter that much. Next, at the top, we have many different columns like the bid price, ask price, last traded price, percent change, implied volatility, the Greeks, and so on. Personally, I feel that many of the columns are irrelevant. So let's customize it. To do that, click on the option item button right beside the columns. Untick last, percent change, mid, open interest, and gamma. Then tick volume, then click done. Let's go through them. Bid is the price where people are queuing up to buy the option. Ask is the price where people are queuing up to sell the option. Implied volatility measures the volatility of the stock. The higher the IV, the higher the option price. Delta is how much the option price changes for every $1 change in stock price. So, for example, for the 180 strike price option, if the stock goes up by $1, the option price will go up by 47 cents. Delta is how much the option price will decay as each day passes. So, this means that for the $180 strike call option, by tomorrow, the option price will drop by 7 cents. And finally, volume is how many options were traded today. So, those are the columns that are used. But of course, you are free to add other columns that you want. Let's talk about the filters option at the top. We will ignore the single option for now. I'll get back to this later, yeah? We are able to show the number of strikes for an expiry date. Just change it to all to see all the options. So, for this example, we can see that the strike price starts from $50 all the way to $265. Next, you are able to show both calls and puts, or just show either calls or either puts. Personally, I like to show both as I might confuse myself if I only show one. You can just leave regular, weeklies, quarterlies, and standard tick, and it will show you all the common options. Non-standard options will appear in the event of a stock split, reserve split, spin-off, or corporate action. For example, a company named Terra Technologies had a 1-for-4 reserve stock split recently. And if you check their options, they have another set of options for the same expiration date. Non-standard options are bad because there's no volume and may not move the way you would expect it to. Therefore, in most cases, it's best to avoid non-standard options. So, just leave it unticked, yeah? Next, you can choose either the mirror mode, where the columns mirror each other from the middle to the side, or the parallel view, where the columns go from left to right. Personally, I prefer the mirror view. And finally, you can choose to show your options either in the ascending strike price or descending strike price. Personally, I prefer ascending as it's much easier to understand. Now, we come to the most important part, how to trade options on Webull. I'll use Bank of America for this demo. Unlike the US version of Webull, where it supports a lot of option strategies like straddle, strangle, vertical, and so on, the Singapore version of Webull currently only supports single option and covered stock. Here's the full list that I got from them. You can see that long call and long put options are supported on all account types. But if you want to do covered call and cash secured puts, the two most basic option strategies, only margin account supports them. Also, take note that you currently can't do covered calls and cash secured put on indexes and ETFs such as SPY and QQQ. But I will be sure to let you guys know when it's finally available, yeah? Alright. First things first, if you want to trade covered calls and cash secured puts, you will need to change your account type to the margin account. So let's do that first. Open up your app at the bottom right, tap on Menu, More, Manage Account. Make sure that it says Margin. Otherwise, you can just tap in and change your account type to Margin. As mentioned earlier, we are able to choose between the single option or the covered option. 99.9% of the time, we will only be using the single option, and we can safely ignore the covered option because they will automatically buy the stock or short the stock for you in that trade. It's probably easier to explain if I just show it to you. So here, I've chosen the covered option. Let's try buying a call at $29 strike price. You can see that while I'm buying the call, I'm also shorting the stock at the same time, and that's not what I want. So let's change it back to single option. For this example, I will show you how you can sell a put option, or also known as cash secured put. To do that, look for the expiration date that you want, then select the put option that you want to sell. Also, if you want to sell, make sure sell is selected. If you want to buy, make sure buy is selected. I can't stress this enough. Many people have lost money by accidentally placing a buy order when they wanted to sell an option instead. One thing that helps is to read it out loud back to yourself. So, for example, tell yourself, I'm selling a put option that expires on 8 September at the strike price of $25. This helps you to reduce your mistakes when trading options. Next, for quantity, it shows 10, but I just want to sell one option. So let's change it to 1. Also, what you can do is go to Trade Settings, scroll to Default Option Orders, and change the quantity to 1. That way, in the future, the default will always be 1. Close the settings panel. There are 4 order types here. Limit order lets you choose what price you want to trade the option at. With market order, you will just trade the option at the current best price. Stop and stop limit are more for traders, where they set a price to limit their losses. So in most cases, we won't be using these two. Personally, I like to use market order as I like to complete my trade quickly because I got better things to do than to wait for the order to fill. But if you are okay with waiting, you can choose limit order. Okay, here's a tip. For limit order, if you want a good price, you can choose the mid price between the bid and ask. Here, if I click refresh, I can get the latest mid price, which I can then use for my limit price. Finally, time in force means how long this order will be available for. Day means if this order doesn't get filled by today, the order will be cancelled. Good till cancelled means the order will last until you go and manually cancel it. Personally, I prefer day as I don't like surprises. Next, here's a very useful feature. At the bottom left, if you click graph, you'll be able to see a profit loss chart of the option that you are trading. For example, since I'm selling a put option at a limit price of 4 cents, my max profit is $4 because remember, one option contract equals 100 shares. As for the losses, my max loss is when the stock goes all the way to 0. Once you are satisfied with your order, click place order. Check through your order to make sure they are correct. Again, if you are selling, make sure it says sell here. Webull charges 55 cents per option contract, so it's rather cheap. The reason my fee is less than that is because I signed up to Webull last year, so my trading fee is $0, but it will eventually go up to 55 cents per contract after 30th September. There are also other miscellaneous fees charged by SEC, FINRA, and option exchanges. Once you are ready, click sell. To check your order, you can go to accounts, then at the bottom left, go to orders tab. If it's not filled yet, you will find it under the working tab. If your option has been filled, it will be in the field tab, and you will also find your option under position. Finally, to close the option, you can just right click on your option, click close, and enter in all your preferences. So that was how to buy and sell options using Webull. Now, here are a few things that you need to take note of when trading options on Webull. 1. Always make sure that you have enough money to trade the options. If you don't have enough buying power, it will say doesn't support opening naked shorts options for now. But if you have enough margin as the buying power, Webull will use your margin as collateral, but it won't charge you any margin interest as the margin is not being used to buy anything yet. However, the danger is that if the margin suddenly becomes not enough, Webull will do a margin call on you and liquidate your stocks to make up for the buying power. 2. Always make sure that you have converted your currency to USD. That's because Webull doesn't automatically do that for you. If you end up having not enough USD, you'll be buying on margin again, which means you'll be charged margin interest. Third, money in Moneybull can't be used as collateral. So let's say if you have $0 in cash and $5,000 in Moneybull, if you try to sell an option that needs $5,000 as collateral, Webull will withdraw the $5,000 from Moneybull to become cash so that it can be used as collateral. So keep that in mind, yeah? Anyway, that was a quick tutorial on how to trade options using Webull. Hopefully, you found it useful. Like, share and subscribe as I'll be posting new videos every Monday, Wednesday and Friday.